Welcome to Value Research's special coverage of Union Budget 2025. The Finance Minister has announced a budget packed with structural reforms, tax changes, and sectoral boosts. But how will this impact the markets and your investments? To break it all down, we have with us Ajay Khandelwal. He's Executive Group Vice President and Fund Manager at Motilal Oswal Mutual Fund. Welcome, Ajay. Good to have you back with us. Now, the budget, it introduces major structural reforms in taxation, power, urban development, mining, financial regulation, and governance. So, which of these do you think will have the most immediate impact?
So, I think the taxation will have immediate impact because the extra money in the hand of the taxpayers will start accruing from April. And our rough estimation says that people will benefit by almost 8 to 9,000 rupees. So that will be an immediate impact. Also, the financial credit guarantee for MSMEs, that also will have an immediate impact because, again, that will help them to have access to capital. So that will have an immediate impact. But the other ones, they will take some time because in terms of power reforms, the GenCos the transmission companies will have to bring that kind of change. So that I think will take some time. It is more medium term kind of an impact that we expect these companies to show. But I think some of these other will have immediate impact.
Sir, the tax slab changes aim to put more money in the hands of the middle class. Do you think this will boost the consumption and corporate earning meaningfully, benefiting equity investors?
So we looked at budget and did a little bit of more data crunching, and our now thought process is that this budget actually addresses on both sides of the problems. One is on the capital expenditure, because when you add the capex number and the other funds which are outside the budget, for example, CPSC and other funds that you add to it, it almost reaches to 15 lakh crore, and the growth is almost 12-13% in capex. On the consumption side, because this 1 lakh crore will be available, now again, our rough calculation suggests that this will have impact of almost 0.6 to 0.7% to the GDP. So yes, these are substantial numbers. Now, what needs to be seen is that how much of it actually will go into consumption, because what will happen is if somebody has home loan, they may try to retire some bit of that home loan. So, and maybe the secondary benefit may come to capital markets where people would like to invest again in markets. So I think that is something, it will be a mix of all these things where they will be consuming more of FMCG, durables. And at the same time, there could be some deleveraging can also happen. So I think we are looking from that perspective that some of these businesses clearly will see benefit. For example, durables, they will clearly benefit. Rest of the businesses, we still need to see what will be the actual impact.
The budget has also made significant allocations to infrastructure and manufacturing. So how do you see this driving earnings growth for companies in these sectors?
See, on the infrastructure side, I think even the last budget had allocation, but it is more a question of execution now. So this budget, I think the defense still has got 11-12% kind of increase in allocation, whereas road and railways has not seen that kind of increase in allocation. So I think from that perspective, the execution is more important. And what happened last time was that because of Biden administration, there was some reluctance in US companies to provide parts to Indian defense companies. I think that also led to some of these delayed purchases that we've seen in numbers for some of these businesses. I think that now that thing will get corrected. So we believe in terms of infrastructure, I think some of, for example, defense will continue to do well. Again, based on our numbers, we believe these infrastructure-related businesses, for example, defense, the sector can deliver easily 15 to 20% kind of earning growth. And order books are healthy. Execution is more important, and because some of these programs are 2 to 3 years kind of engagement programs, So any kind of supply disruption leads to miss in earnings. And we believe this year, I think they'll be able to deliver better earnings.
Sir, you co-manage the Motilal Oswal Business Cycle Fund. Given the budget allocation and the structural reforms on the sectoral growth, which stage of the business cycle do you think we are in currently? And how should the investors adjust their equity allocations to align with these macro trends?
So I'll tell you, from investors' perspective, I think if they have to look at last 25 years, there are only 4 years where market has given negative returns. So out of that, I think the way this year has started without any real macro challenges. For example, there is no Lehman crisis, there is no COVID, which is there. It's just that now US market is doing well, so some of the money flow is going into US market. So from Indian investors' perspective, I think uh, I don't see that in the markets to really end up the way about those 4 years that I've spoken about, because even the macro and micro conditions do not suggest that we are in that kind of a phase. So I think investors need to stay invested. Maybe they need to spread their investment for next couple of months so that they can capture this volatility and benefit out of it. Because what's happening is, from, for example, business cycle. Now, there are some of these industries which are at very early stage of growth. Manufacturing, especially electronics manufacturing, and if you see the average industry growth is north of 25-30%. And the good part is that government is cognizant of that, and wherever we need support, government is trying to bring that support wherever we require these key raw materials. We have seen in this budget also there is duty reduction, basic custom duty reduction for some of those materials where we need where availability is a challenge. So I think our focus is to pick some of these sectors where the earning growth can be north of 25%. And we believe where the runway for growth is available for next 3-5 years, where the cash generation is good. So those kind of sectors create a lot of wealth. So I think from that perspective, investors who have 3 to 5 years kind of investment horizon, I think they really do not need to worry about this market correction, because this always happens, as I said.
Okay, and with allocations to infra, manufacturing, and financial inclusion, do you see greater opportunities in small and mid-cap stocks post-budget?
So a lot of manufacturing companies actually fall into small and mid-cap domain. So small and mid-cap, and also when we are interacting with companies, we are finding that they are actually increasing their skill set. So if there is technology tie-up required, they're going out and doing the technology tie-up. They're coming up with new processes, new products, and expanding their market share. So, given the backdrop, I think for these sectors, if they continue to deliver healthy growth, I think mid and small cap companies will benefit largely. And the good part is balance sheets are also deleveraged, so finances are not a problem for these companies, which is very important if you want to make money in the market.
Okay, and can you also share which themes within these segments could deliver strong returns in the next, say, 3 to 5 years?
So I believe there are some structural stories, for example, how the whole power value chain is changing. There is focus, even in India and globally, there's focus on renewables. And if India has to meet the 500 gigawatt target by 2030, then the whole value chain has to work. There will be transmission companies, generation companies, the power ancillary companies which need to do well. So investors looking for next 3 to 5 years have to understand that these kind of opportunities will come, and there will be a lot of winners coming from these sectors. Manufacturing is again, for example, in this budget, footwear, for example, now is given thrust. Toys, we want to export toys. So we hardly have any presence. And these are large employment generators also. So I think some of these manufacturing related sectors will continue to do well. In terms of consumption, because now there will be higher disposable income in the hands of consumers. I believe consumer durable will do well. And the per capita income that we have, there is that move towards more premium products. So the discretionary products will do well. You look at any hotel, hospital, any airline, you will see that India discretion spend is not going down. So I think these are some of the sectors which will do well for next 3-5 years.
Sir, if an investor wants to align their portfolio with the vision of the budget, what should be their ideal asset allocation strategy at this point of time?
See, budget comes every year. So for investors, I think the right time horizon is very important. For equity especially, because these kind of events, and not just budget, because the way global how things are playing out, there's certain more challenges which cannot be preempted. So you have to give time to your investment. You have to stay invested. And if you have time horizon of more than 5 years, I think equity is the asset class which is most tax efficient, which is liquid, and which can give very good returns. So this year, we expect this year to be, the expectation, because of last 2-3 years, expectations are built in the mind of investors that every year you will deliver 30%, which doesn't happen in real world. So I think they need to have expectations where they can expect better returns from other asset classes, and over period, because index itself has delivered 16% return for last 15-20 years. So I think the kind of corporate earnings that we believe Indian corporates can deliver, I think we believe that investors will be rewarded if they stay invested for 3 to 5 years. We at this point in time, we suggest that investors need to have a combination of large and mid cap, because the way things are changing, I believe those are the kind of categories where you have flexibility, and it allows you to capture both the upside of small and mid caps, whereas you need to have safety of large caps. So I think some of those things investors have to keep in mind.
Okay, so you did mention time horizon and the class where one should invest, but is there any other piece of advice that you'd like to give to retail investors who are trying to navigate the equity markets post this budget?
So, as I said, it is very difficult. Even as fund managers, we find it very difficult to time the market. But time and again, we have seen if you are invested in good businesses, they deliver and eventually returns come. So we have to be patient. I think that is the only mantra. If you want to make money in the market, you need to be patient, and you need to have right asset allocation. So one is asset allocation and need to have right time horizon. I think those two things, they are very simple, basic things, but I think they work if they are followed properly.
Right. Well, thank you, Ajay, for this, for sparing time and coming for this discussion and helping us decode this budget and its impact on markets and portfolios. Thank you.
Thank you.
Think equity. Think Motilal Oswal. Enduring legacy comes full circle, fueling dreams with trust eternal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.